All names, email addresses, and other personal data shown in this video are fictitious or used with consent for demonstration purposes only. This content is intended solely for training and informational use within a controlled environment. No real personal data has been disclosed or misused in the making of this video. Welcome to this People tutorial for HR managers. Managing employees efficiently is key to any organization's success. In this guide, we'll explore the platform's core functionalities, making HR operations smoother and more effective. Let's begin with time recordings. This section allows employees to check their timestamps, while HR managers can monitor all people records. Clock-ins and clock-outs can be recorded through Tanda devices or directly via the app if this feature is enabled in the authorizations. This is useful for employees working remotely or without access to a physical device. The calendar offers different views, with the default being weekly, but it can be switched to monthly, daily, or list format to better analyze recorded timestamps. Employees can also access personal data, such as contact details, salary, vacation days, attachments, and work hour balances. An HR manager has full access to all employees' work records and can modify them if necessary. Filters on the left allow for quick searches, making it easy to refine and find relevant information. Beyond individual time records, HR managers also oversee departmental structures and cost centers. Let's explore the department section. Departments are a key part of your organization's structure. They represent different areas of responsibility, such as human resources, administration, IT, or marketing. By defining departments, you can assign employees, manage teams effectively, and align each department with a specific cost center for budget and financial tracking. To create a new department, simply click the New button on the department's page. In the form that appears, fill in the necessary details. Start by entering a name for the department. This should clearly represent its function, like finance and accounting or customer service. Next, assign an owner if one is available. If not, you can add the owner later after adding employees. The owner is responsible for managing the department's operations and performance. Then, link the department to a cost center, which is used for budgeting and tracking financial activities. You can use the plus button to create new cost centers. Now, set the department's status to either active or inactive. Active departments are available for assignments, while inactive ones are archived but retain historical data for reference. You can review the change log to track any modifications made to the department, including details on who made the change and when it was updated. If you need to edit an existing department, click the pencil icon next to the department name. Once all the details are complete, click OK to save your department, or Cancel to discard changes and close the form. With departments set up, you'll have a more organized structure that ensures teams are clearly defined, responsibilities are properly allocated, and financial tracking is aligned with your organization's goals. HR managers have full access permissions and can modify this data. In the Employee section, I can access a complete list of workers. HR managers can view all employees along with key details such as contact information, salary, vacation days, and work hour balances. At the bottom of each employee profile, the change log records every modification made to their profile, allowing for tracking of changes over time. This log is also available in multiple sections of People. Returning to the main Employee section, several quick access buttons provide additional functionality. The Regime button allows you to view, edit, and create new regimes. Regimes are essential for defining the working conditions, rules, and salary structures that apply consistently to employees using this regime. They allow you to configure all the rules that remain unchanged between employees within the same group. Let's begin by clicking the New button on the Regime screen. This opens a form where you can define all the necessary details for the new regime. First, assign a descriptive name to the regime. In this example, we'll call it Laborers. This name will make it easy to identify and assign to the appropriate employees. Next, toggle the Paid Hourly option to specify that the salary for this regime will be calculated on an hourly basis, which is ideal for laborers or roles with flexible working hours. Now, define the weekly hours. For laborers, we'll set this to 40 hours per week, reflecting the standard full-time working schedule. You can adjust this based on your company's policies or applicable labor regulations. The Day Rate Formula section allows you to calculate daily wages or benefits. Using predefined variables and operators, you can customize formulas to fit your company's needs. For this example, we'll use the default formula, but we'll revisit this in future steps if we need more customization. In the Limits section, we'll define the boundaries for time bank, overtime hours, and vacation days for the laborers regime. These limits determine what will be included in payroll calculations and ensure that only valid hours and days are considered. For laborers, let's start with the time bank. Since laborers don't use a time bank, we'll set both the minimum and maximum hours to 0. This ensures that no hours are accumulated or carried over for payroll purposes. Next, we'll configure overtime hours. For this regime, we'll set the minimum overtime to 0 and the maximum to 10 hours. This means that any overtime beyond 10 hours will not be included in the salary calculation, aligning with company policies. Finally, we'll set the limits for vacation days. Here, we'll allow between 0 and 25 days of vacation. This ensures that no more than 25 days are accounted for in payroll or benefits. With these settings, the laborer's regime is configured to meet specific requirements, ensuring accurate tracking and compliance with your policies. Once the limits are set, you can proceed by clicking OK to save the current progress and continue configuring the remaining sections of the regime. Now let's move on to configuring the time recording intervals, which define the breaks for employees. For laborers working in shifts, we'll set up 60-minute breaks for each shift. These breaks are flexible, allowing workers to take them any time within the specified interval. To begin, click the New button to create a new interval. We'll start with the first shift, which runs from 6 o'clock to 14 o'clock. For this, set the type to regular. Next, define the valid from and valid to dates to indicate when this interval will be applicable. Then, set the time from field to 10 o'clock and the time to field to 11 o'clock. This defines a 1-hour break in the middle of the shift. Finally, specify the break duration as 60 minutes. Once done, click OK to save. Repeat the process for the second shift, which runs from 14 o'clock to 22 o'clock. Again, set the type to regular and configure the break time between 18 o'clock and 19 o'clock with a 60-minute duration. Save the configuration once complete. Lastly, set up the third shift, which runs from 22 o'clock to 6 o'clock. For this shift, define the break interval from 2 o'clock to 3 o'clock, ensuring the break duration is 60 minutes as before. Save the changes. Once all 3 intervals are configured, you'll have breaks set up for every shift, ensuring compliance with company policies and allowing employees to take their pauses within the designated times. You can review or modify these settings later if needed by clicking on the pencil icon next to each interval. Now let's move on to configuring company insurances, which define the different insurance policies available to employees. These policies ensure that salary calculations correctly account for situations such as workplace accidents, maternity leave, non-occupational injuries, and illness. The advanced formula calculations support the insurance rules, ensuring compliance with company policies and legal requirements. It is important to note that these values are provided as an example. The actual configuration depends on the company's insurance policies and the local labor laws in effect. HR managers responsible for configuring the system in People must be familiar with the applicable insurance regulations to ensure accurate implementation. To begin, click New to create a new insurance entry. Let's start with occupational accident insurance, which covers professional injuries. Set the absence type to professional injuries and define the coverage percentage at 80%. The waiting period days should be set to 3, meaning the employee must wait 3 days before receiving coverage. The waiting period percentage is 100%, which means there is regular salary coverage during the waiting period. The day rate formula ensures that the salary calculation is adjusted correctly, taking into account annual salary and any applicable benefits according to the local law. This formula calculates the daily salary, considering both the employee's annual salary and any allowances for dependents. First, we take the annual salary, then we add the dependent allowance, but since this is usually given as a monthly amount, we multiply it by 12 to convert it into a yearly value. Once we have the total income, we divide it by 365 days to get the daily compensation amount. This formula is useful when an insurance policy includes benefits for dependents and needs to account for them in salary adjustments. Is determinant option, when enabled, ensures that the indemnity is declared as taxable income. Is mandatory option is for informational purposes only and does not affect recalculations. Once all values are set, click OK to save. Next, we configure maternity insurance. The absence type is set to maternity, with an 80% coverage percentage and 0 waiting period days, meaning the coverage starts immediately. The duration days are set to 98 to match the standard maternity leave period of 14 weeks. The formula used for salary calculations is conditional and applies different salary calculations based on the employee's income. First, it takes 80% of the annual salary and checks if that amount is greater than $80,200. If it is, the daily rate is fixed at $220 per day. Otherwise, the salary is simply divided by 360 days. This formula is useful when there's a maximum daily allowance, meaning that even if an employee earns more, the insurance will only cover a fixed amount. Once configured, we save the entry. For non-occupational accident insurance, we follow a similar approach. The absence type is set to non-professional injuries, with an 80% coverage percentage and a waiting period of 3 days, meaning the employee must wait 3 days before receiving coverage. The waiting period percentage is 100%, so regular payments are made during that time. The day rate formula adjusts salary calculations by applying a specific condition for high-income employees. If the annual salary exceeds $148,200, then instead of calculating the daily salary normally, it caps the salary at $148,200 and takes 80% of it, dividing by 365 to get the daily amount. If the salary is below this threshold, the formula considers both the salary and dependent allowances. This type of formula ensures that employees with very high salaries do not receive unlimited insurance compensation and that a cap is applied according to insurance rules. Finally, we configure illness insurance. The absence type is set to illness with an 80% coverage percentage and 0 waiting period days, meaning it applies immediately when an employee falls under this category. The day rate formula ensures that the correct salary adjustments are made when an employee is on sick leave. This is the simplest formula. It just takes the annual salary and divides it by 365 days, giving a straightforward daily salary calculation. This is commonly used when there are no special rules, caps, or additional benefits affecting the compensation. After verifying the settings, we save the entry. With these insurances configured, The payroll system will automatically apply the correct calculations when employees fall under these categories. If needed, HR managers can adjust the values to ensure they align with company policies and local regulations. With company insurances now set up, let's move on to the next step. Compensations and benefits. This section allows you to configure additional bonuses or benefits associated with the regime, whether it's performance bonuses, transportation allowances, or other benefits. This is where you define the rules that apply uniformly to all employees under the regime. One of the most crucial aspects of this setup is the sort field. This determines the calculation order of compensation items within payroll. If one compensation depends on another, its sort value must be higher than the item it relies on. Otherwise, the required value won't be available because it has not been calculated yet. To help users manage this, People provides a color-coded indicator system in the formula editor. When a variable appears in solid green, it means the value is already calculated and available for use in the formula. If a variable is in solid red, it means the value cannot be used because it hasn't been calculated yet. This happens when the sort order is incorrect, meaning the required value is processed later instead of before it. By carefully managing sort values, you ensure that each compensation is calculated at the right moment and can be used in subsequent formulas without errors. To start, click New to create a new entry. To create a bonus, start by selecting Income as the type, then name it Bonus, add a space, and include the variable Last Year. Since this bonus is taxable, enable the Subject to Taxation toggle. If employees should receive only a partial bonus based on their working period, enable Can Be Partial. Set the period type to month and assign period number 3, meaning this bonus will be paid in March. The formula used is bonus percentage divided by annual salary, then multiplied by 100, which calculates the bonus as a percentage of the annual salary. The sort value for this entry should be lower than any other compensation that depends on this bonus amount in its own calculation. Once everything is set, click OK to save. Now that laborers are paid hourly, we need to set up allowances for public holidays and vacations. The process is the same as for bonuses, but this time the formula will be different. To begin, click New to create a new entry. In this example, we will configure the public holiday allowance. Start by naming this entry Public Holiday Allowance and selecting Income as the type. Enable Subject to Taxation since this allowance must be included in the total taxable income. Also, turn on Can Be Partial to ensure that the allowance is calculated proportionally if the employee has not worked the full period. The sort value is crucial in this configuration. Since public holiday allowance is used in other compensations, such as the 13th month salary, it must be processed first. To ensure this, its sort number must be lower than that of any dependent entry. This guarantees that all calculations are performed in the correct sequence, preventing errors in salary computation. For the formula, we use adjusted period salary to ensure that the calculation considers the correct salary adjustments for each period. To determine the correct percentage, we divide these days by the total number of working days in a year. The calculation follows this logic. 9 public holidays divided by 251 working days, which is derived from 260 total workdays in a year minus 9 holidays. The result, multiplied by 100, gives us 3.6%. This percentage represents the proportional compensation that will be applied to each pay period. This value should be entered in the employee percent field to ensure that the correct percentage is applied based on the employee's salary. Once everything is set, click OK to save the entry. With public holiday allowances configured, we can now proceed to set up vacation allowance, following a similar approach but with a different percentage and calculation method. Since this is an allowance, its setup process is similar to public holiday allowance, but it uses a different percentage and formula. Click New to create a new entry. Select Income as the type and name it Vacation Allowance. Enable Subject to Taxation since this allowance must be included in the total taxable income. For the sort value, we must ensure this allowance is processed after public holiday allowance, but before any compensation that depends on it. Since public holiday allowance has a sort value of 11, and we have assigned 21 to this entry, everything is correctly ordered. Additionally, public holiday allowance is fully green, indicating that it has already been calculated and can be used in the formula. The formula applied here is adjusted period salary plus public holiday allowance, ensuring that vacation allowance is calculated correctly. For the percentage, we need to determine how much of the salary corresponds to vacation days. The calculation follows this logic. 20 vacation days divided by 240 working days, which comes from 260 annual working days minus 20 vacation days. The result, multiplied by 100, gives us 8.33%. This percentage is entered in the employee percent field. Once all the values are set, click OK to save. This allowance is now ready to be included in salary calculations, ensuring that employees receive the correct compensation for vacation days. Now click New to create the final entry. Let's configure the 13th month salary. Choose Income as the type. Set the name as 13th month salary, add a space, and include the variable year. Since this salary is subject to taxation, enable the toggle. The formula used includes adjusted period salary, ensuring that the compensation correctly reflects the laborer's earnings each month. Additionally, it incorporates both the public holiday allowance and the vacation allowance, which is why they were configured first. Their sort values are lower, allowing this calculation to use their results. For hourly laborers, the 13th month salary is distributed monthly instead of being paid in a single installment at the end of the year. The percentage is set to 8.33% derived from the formula 1 divided by 12 multiplied by 100. This percentage is entered in the employee percent field and ensures that the equivalent of one extra monthly salary is evenly spread across all 12 months of the year. Once all the values are set, click OK to save. Managing compensations and benefits correctly ensures that salaries, bonuses, and allowances are calculated accurately and in compliance with company policies. Now let's move on to contribution rules, the final step in configuring the regime. Contribution rules define deductions related to Social Security, taxes, and other mandatory contributions, ensuring that payroll calculations align with local regulations and company policies. In this section, we configure various contributions that may apply based on specific conditions such as employee age, income level, and work duration. These rules ensure that deductions are correctly applied to salaries, maintaining compliance and accuracy. Let's configure the old age and survivor's insurance, disability insurance, and loss of earnings insurance contribution rule. This is one of the key deductions that apply to laborers and must be correctly set up to ensure compliance with legal and company policies. To begin, click New to create a new entry. Ensure the type is set to contribution, as this is a mandatory deduction. In the name field, enter OASI/DI/APG to clearly label the rule. Next, ensure the Can Be Partial toggle is enabled. This allows the contribution to be applied proportionally when an employee joins or leaves the company in the middle of a pay period. The period type is set to month, meaning this contribution will be calculated on a monthly basis. The sort value is set to 41 automatically. This determines the order in which this contribution is calculated. The formula used in this rule ensures that the deduction is applied correctly based on the employee's age and income. The logic is as follows. If the employee is over 65 years old and has a determined income lower than $1,400, the contribution is not applied. If the employee is over 65 years old, an exemption of $1,400 is deducted from the determined income before calculating the contribution. Otherwise, the contribution applies to the full determined income. This formula ensures that workers above a certain age receive the appropriate exemptions, aligning with Social Security rules. In the employee percent and employer percent fields, enter 5.3%. This defines the shared contribution between the worker and the employer, ensuring that both parties fulfill their obligations. Once all settings are confirmed, click OK to save the contribution rule. Now let's move on to configuring Unemployment Insurance Tier 1, which ensures compliance with the local unemployment contribution rules. This deduction is applied based on specific employee conditions such as gender, age, and income level. To begin, click New to create a new contribution rule. Make sure the type is set to contribution. In the name field, enter Unemployment Insurance Tier 1. Next, ensure the Can Be Partial toggle is enabled. This allows the contribution to be adjusted proportionally when an employee joins or leaves the company in the middle of a pay period. The period type is set to month, meaning this contribution is calculated monthly. The sort value is set to 51. In this case, a sort value of 51 is acceptable because there are no dependencies on variables that have not yet been calculated. It is also important to note that no variables are marked in full red, which confirms that all necessary values are already available at this stage of the calculation. Now let's configure the formula for this contribution. This formula ensures that only employees who meet specific conditions will have this deduction applied. If the employee is male, under 65 years old, and has a determined income of $12,350 or more, the contribution is calculated on $12,350 as the base. If the employee is female, under 64 years old, and has a determined income of $12,350 or more, the contribution is also based on $12,350. If the employee is male and aged 65 or older, no contribution is applied. If the employee is female and aged 64 or older, no contribution is applied. If the annual salary is less than $2,300, the contribution is not applied. In all other cases, the contribution is calculated based on the determined income. This structured approach ensures that employees below the required income threshold or above the retirement age are exempt from this contribution, following legal requirements. In the employee percent and employer percent fields, enter 1.1%. This ensures that both the employer and employee contribute equally to this unemployment insurance. Once all settings are verified, click OK to save the contribution rule. Now, let's configure the contribution rule for non-professional injuries. This contribution ensures that employees are covered for injuries that occur outside the workplace. Employers cover the premiums for insurance against professional injuries and illness, while employees generally pay the premiums for non-professional injuries. However, the employer initially covers the full premium and then deducts the employee's share directly from their wages. To start, click New to create a new entry. Set the type to contribution. In the name field, enter non-professional injuries to clearly label the rule. The formula used ensures that the deduction is correctly calculated based on the employee's relevant income. If the relevant income is equal to or greater than $12,350, then the contribution is calculated on this amount. Otherwise, the contribution is based on the relevant income minus any maternity compensation. This ensures that employees who have received maternity benefits have the correct contribution applied. The employee percent is set to 2.13%, ensuring that the worker is in compliance with local law requirements. Once all settings are confirmed, click OK to save the contribution rule. Now, let's configure the contribution rule for loss of earnings insurance. This contribution provides financial support in cases where an employee temporarily loses their ability to earn wages due to specific conditions, such as illness, ensuring continued income stability. To begin, click New to create a new entry. Set the type to contribution, and in the name field, enter Loss of Earnings Insurance to clearly label the rule. The formula ensures that the deduction is correctly applied based on two key conditions. If the contract duration is less than 90 days, the contribution is not applied, and the employee is not covered according to local law. This prevents temporary or short-term contracts from being included in this insurance. If the employee is under 65 years old and has an annual salary equal to or above $2,300, then the contribution is based on the relevant income. Otherwise, the contribution is not applied. This logic ensures that only employees who meet the necessary conditions are included in this contribution scheme. The employee percent and employer percent fields are both set to 0.9%. ensuring that the contribution is equally shared between the worker and the employer in compliance with local regulations. Once all settings are confirmed, click OK to save the contribution rule. Now, let's configure the final contribution rule. Unemployment Insurance Tier 2. This contribution applies only to employees whose income exceeds a certain threshold, ensuring compliance with unemployment insurance regulations. To begin, click New to create a new entry. Set the type to Contribution, and in the name field, enter Unemployment Insurance Tier 2 to clearly label the rule. The formula ensures that the deduction is correctly applied based on gender, age, and income level. If the employee is male, under 65 years old, and has a relevant income greater than $12,350, the contribution is calculated on the portion of income exceeding this threshold. If the employee is female, under 64 years old, and has a relevant income greater than $12,350, the same rule applies. Otherwise, the contribution is not applied. This logic ensures that only employees who surpass the set income threshold contribute to the second tier of unemployment insurance. In the employee percent and employer percent fields, enter 0.5%, ensuring that the contribution is equally shared between the worker and the employer in compliance with local regulations. Once all settings are confirmed, click OK to save the contribution rule. With all the contribution rules in place, the regime setup is now complete. This ensures that payroll deductions are calculated accurately, comply with legal requirements, and are structured correctly for every laborer. The entire configuration guarantees a seamless payroll process, aligning with company policies and local regulations while ensuring fairness and precision in every calculation. These rules will continue to function automatically for payroll processing, applying to all employees under this regime. Adjustments will only be necessary if there are changes in legislation or updates to insurance agreements. Otherwise, the setup remains stable, requiring no further modifications. When you're ready, click OK to save the regime. It will now appear in the list, ready to be assigned to employees who fit these criteria. HR managers also oversee employee performance. The Performance Reviews button allows generating review campaigns. Clicking Generate Reviews triggers the creation of performance reviews for all active users for the current year. Alternatively, the new button allows generating a review for a single employee, useful in cases where the individual was hired after the campaign began. Once confirmed by clicking OK, the performance reviews process becomes available. At this stage, employee managers can view the reviews for their teams and define objectives for the current year. Payroll management involves generating, reviewing, and distributing salaries. The Payroll button opens the payroll management page, where several actions are available. Let's go through them one by one. Generate payrolls allows you to select users through filters to generate payrolls. If no filters are applied, payrolls can be generated for all employees by clicking Generate Payrolls. If payrolls have already been created and require updating due to corrections, overwrite existing payrolls can be used. The generated payrolls are then available to employees who can download their own payslips. Otherwise, they are ready to be sent to employees using the Send Open Payrolls button. Download Payment File is used to download the payment file that can be uploaded to the bank system to process salary transfers. Send Open Payrolls allows employees to receive their payslips in electronic format directly in their mailbox. If employees have entered their personal email in their profile, they will receive the payslip as a PDF attachment. Once sent, the status will change to Sent. Download Payrolls is used to download a PDF file containing all payrolls, making it possible to print them for employees who need a physical copy. Close Open Payrolls finalizes all payrolls, regardless of their current status. Once payrolls are closed, they can no longer be modified, similar to closing a payroll period. New allows manual creation of a pay stub for a specific employee. Close Month button closes the selected month and prevents further registrations. Generate Next Year button will copy and insert salaries and holidays data from current year to next year for each active employee. The Organization Chart button shows the company hierarchy, displaying reporting relationships and team structures. The Balances button provides an overview of work hour balances, overtime, and vacation accruals. The Message button sends notifications or communications to one or more employees through the Tonda device. Finally, the New button allows you to create a new employee. Here, you will need to enter various details that define the employee's profile within the system. First, in the User field, select the employee from the drop-down list. This field displays the names of all available users in the system. If the employee is not listed, they must be added first. Now, let's create a new user. To begin, enter the email address in the designated field. This will serve as the user's unique identifier and primary contact method. Next, input the first name and last name to correctly register the user's identity. Proceed by selecting the birth date using the calendar picker. This information is important for records and compliance with legal regulations. Then specify the user's country and city. These fields ensure that the user is correctly associated with the proper location for tax and administrative purposes. Next, enter the street address, postal code, and state or province. To personalize the profile, you can upload a profile picture. Simply drag and drop an image into the designated area or click to browse and select a file. Once all required fields are completed, click OK to save the user profile. This user can now be assigned as an employee in the system. Next, select the manager, who is the direct supervisor responsible for overseeing the employee's work. Then, choose the department where the employee will be working. Proceed by entering the position, which specifies the employee's job title, ensuring clarity in their role within the organization. In the Contract Type field, select the appropriate contract category. Options may include permanent, temporary, or probationary, depending on the nature of employment. Specify the employee's nationality and work province to ensure compliance with labor laws and tax regulations based on the employee's working location. This section may also be relevant for child allowance eligibility in some jurisdictions. Enter the employee's birth date and select their gender from the drop-down menu. Additionally, define their marital status, indicating whether they are single, married, or have another status. If applicable, provide details for the visa status, which is important for employees requiring work permits. For tax and benefits purposes, enter the employee's Social Security number. Additionally, assign a badge ID, which serves as an identification number within the company's time and attendance system. Enter the employee's personal email and phone number. These contact details allow for direct communication and also enable employees to receive payroll PDFs via email. Finally, set the status of the employee. If they are currently employed and active, select Active. Otherwise, choose Inactive for employees who are no longer working with the company. Once all required fields are completed, click OK to save the new employee profile. With the employee successfully created, additional details can be managed within different sections. Now, we can start setting up a regime for this new employee. Click on the New Regime button, then select one of the regimes we have created. Set the start and end date of the contract, specify the work percentage, and choose the days the employee will work. Since this is an employee and not a laborer, I will select only one 8-hour shift, as this employee is not paid by the hour. Once everything is set, click OK. On this screen, we can also assign the same regime to multiple employees. In this case, I will proceed by clicking OK. The regime has been created. Now we need to set the salary. Click on Salaries, then select New Salary. Here we enter a monthly salary of $5,000 as an example and apply a 3% bonus. Next, we assign vacation days to the new employee. Click on New button. This year, we set 25 vacation days. Here as well, vacations can be assigned to multiple users at the same time. Now, we need to create the bank details for salary payments. Enter all the bank details, including the bank name, validity period of the account, the IBAN, and the BIC code and bank address. Once done, click OK. At this point, we configure the contributions. Click on Contribution Rules, then select New Contribution Rule. Now we enter the second pillar pension contribution for the employee. In this example, we use the formula adjusted period salary and apply a percentage of 9.5% for both the employee and the employer. Once done, click OK. If the employee has children, we add them under dependents. Here, we define the child allowance rules and create the dependent records. To add a child, press New Dependent. In the Payroll name field, enter child allowance to specify the type of benefit. Fill in the dependent's first name and last name and enter their Social Security number. Next, provide the date of birth. If the child is adopted, you can also enter the date of adoption. Select their nationality and gender. If the dependent is a student or unable to earn, you can enable the respective toggle. The system automatically calculates the child allowance amount. Once all details are entered, click OK to save the dependent. OK, the employee has been successfully created. Now we can click OK and move forward. Now let's see the shift section. HR managers can view, edit, and create work shifts in the Shifts section. Shifts allow you to define work schedules by specifying start and end times, durations, and even overnight transitions using the Day Delta feature. Whether you have fixed schedules like morning, afternoon, or night shifts, or flexible durations, this section provides full control to meet your organizational needs. To create a new shift, start by clicking the New button on the Shifts page. This will open the shift creation form where you can enter all the necessary details. First, give your shift a clear and unique name, like morning, afternoon, or night, to make it easily distinguishable from others. Next, choose the shift type. If your shift has specific start and end times, select time. Otherwise, if the shift is defined by a total number of hours without specifying exact times, select duration. For time-based shifts, enter the start and end times in the fields labeled Time From and Time To. Be sure to use the right time format, for example, 6:15 for a morning start time. If the shift extends past midnight, use the Day Delta field to indicate this. For example, if your shift starts at 10 p.m. and ends at 6 a.m. the next day, set the Day Delta to 1. If it ends on the same day, leave it as 0. Now decide the shift's status. If it's ready to be assigned to employees, select Active. If you're creating it for future use or testing, set it to Inactive. Before saving, you can also review the changelog section to see any updates made to the shift. Once all the details are entered, click OK to save the shift, or cancel if you need to start over. Your newly created shift will now appear in the shifts list, ready to be used in your scheduling. Creating shifts has never been so simple. Handling absences is simple. HR managers have full access to this section, enabling the creation, modification, and correction of absences for all employees. Unlike standard users and managers, HR managers can override the validation process. When an absence is corrected, it is automatically approved without requiring additional validation. This is especially useful for absence types that typically need approval, such as planned vacation days. Inserting an absence is simple. Clicking on the calendar allows selecting the absence type, start and end time, and confirming the record. Alternatively, dragging across the calendar visually defines the period, after which the absence type can be selected and confirmed. If an existing absence is modified by an HR manager, the changelog is automatically updated, ensuring that all adjustments are properly recorded for auditing and tracking purposes. HR managers can also configure absence types and manage public holidays. Clicking on Types of Absences opens the configuration screen where new absence types can be defined, such as sickness, vacation, or unpaid leave. Each absence type can be customized with a name, color, approval requirement, and its impact on time tracking, overtime, and vacation balances. For example, an absence can reduce vacation days, count as working time, or be neutral for payroll purposes. Once saved, these types become available when managing employee absences. Under public holidays, HR managers can import official holiday calendars directly from Google Calendar by inserting the calendar URL and clicking Import. This simplifies holiday planning and ensures that public holidays are consistently applied across all employee records. These tools help standardize absence management, ensure compliance, and reduce manual work when dealing with time off. In the Expenses section, HR managers have full access to employee expenses and expense requests, allowing them to oversee the entire reimbursement process. If the expense management process is handled by an accountant, the necessary permissions must be configured to grant access accordingly. Approved expenses are automatically included in Payroll unless the Include in Payroll option was disabled during submission. In such cases, the reimbursement must be processed manually outside of People. To update the status of an expense, simply click on the Edit icon on the left. When the expense has been refunded manually or is scheduled for reimbursement in the next payroll cycle, change the status to Refunded by clicking Refund. If the Include in Payroll option is enabled, once the status is updated, the system will automatically process the reimbursement. The employee will see a dedicated line item in their payroll breakdown indicating the refund. Employee development is a key responsibility of HR managers. In the training section, you can create and manage courses to ensure workforce growth. As an HR manager, you have full control over training courses, allowing you to create new training programs, enroll employees, and manage the entire training process. To create a new training session, click the New button. From this screen, you can set up training sessions, define their content, and assign them to employees across the company. Start by entering the training name and training date and specify the training provider, whether internal or external. In the description field, you can provide detailed information about the training, including key topics, objectives, and any necessary instructions. The built-in text editor allows for rich formatting to ensure clarity. You also have the ability to edit training content, manage attendees, and oversee enrollments. You can specify whether the training is mandatory, ensuring employees must complete it, or public, making it visible to all employees. The status option allows you to activate or deactivate the training. Active sessions are available for enrollment, while inactive ones remain stored but inaccessible to employees. Once all the details are entered, click OK to save the training and make it available for enrollment. Now, let's go through the open positions section, where HR managers can manage job postings. This section contains a list of all active job openings, showing key details such as the job title, location, salary range, status, posting and closing dates, and job requirements. The contract type, work percentage, and whether the position is public or internal are also visible. Each job entry indicates when it was last updated and by whom. HR managers can edit existing job postings by clicking on the edit icon next to each entry. The new button at the top right allows the creation of a new job posting. At the bottom, a public page URL is available, which can be used to share job listings externally, for example on the company's website or career portals. HR managers have full control over job postings within the open positions section. They can create new job openings by clicking the new button and filling in key details such as the job title, department, location, work percentage, and contract type. HR managers can choose to make positions public for external candidates or keep them internal, limiting access to company employees. The description field allows for a detailed job overview, while the requirements section lets HR specify necessary skills, experience, or qualifications. In the What We Offer section, HR managers can highlight benefits, perks, and other advantages of the role. The posting date and closing date fields help manage when the position is published and when applications will no longer be accepted. If needed, they can copy a dedicated job link to share externally on the company's website or recruitment portals. The salary range can be adjusted using the interactive slider to set a minimum and maximum expected salary for the role. HR managers can review and evaluate candidates from the recruitment section. Each candidate profile includes essential details such as personal information, salary expectations, and the source of the application. The attachment section provides direct access to uploaded documents, including the candidate's CV, presentation letter, and any additional files. To manage the recruitment process, HR managers can update the candidate's status to under review, rejected, or accepted, ensuring proper tracking of applications. It's also possible to manage interviews. For each candidate, HR managers can track interviews by selecting the candidate, assigning the interviewer, choosing the interview date and mode, and adding relevant notes and outcomes. This feature helps maintain a complete record of the recruitment process and ensures better coordination across the hiring team. Clicking on a candidate's record allows for in-depth evaluation and decision-making. If a candidate is accepted, their information can be used to proceed with hiring. If rejected, HR managers can document the decision while keeping the candidate's record for future reference. All attachments are available for download, making it easy to review relevant documents before finalizing the hiring decision. Once all details are entered, clicking OK will save the job posting, making it available for candidates to view and apply. Finally, in the statistics section, HR managers can analyze HR data through interactive charts and visualizations. Unlike regular managers, HR managers have full visibility over all employees, not just their team. This section provides comprehensive insights into the entire workforce unless restricted through specific authorizations. Filters at the top refine data by selecting a time range or department, with quick selection options such as last week, last month, or year to date. The dashboard provides insights into workforce composition, The New Employees panel displays the number of hires in the selected period, while the Total Payrolls amount panel shows payroll expenditure. Charts such as Employees by Position help visualize workforce distribution, while Employees by Contract Type categorize workers as full-time, part-time, or other types of contracts. Each graph supports drill-down functionality, meaning that clicking on a section reveals the individual employees included in that data set for a more detailed view. At the bottom, the worked hours graph presents total employee work hours over the selected period, helping track productivity trends. Since this section contains sensitive data, HR managers have unrestricted access, while regular managers can only view statistics related to their team unless otherwise configured. This ensures that only those with proper permissions can analyze detailed workforce insights while maintaining data security. Now that you know how to use people as an HR manager, you are ready to oversee your organization's workforce efficiently. Logging in and exploring the platform's features will make HR management smoother and more organized.